The current live price for RZLV AI, trading under the ticker RZLV, is exactly $2.61 per share as of this moment on May 6, 2026. We are seeing the stock hold steady with a minor intraday gain of about 0.19%, moving within a relatively tight range, despite a broader environment of volatility for software infrastructure and smaller AI names. While many investors might look at a $2.61 price tag and see a microcap struggling to find a floor after its 52-week highs near 8, there is a massive disconnect between the stock's current valuation and its internal operational velocity. Most people assume that a company trading this low is burning through cash with no end in sight, but the reality is that RZLV just posted a first-quarter revenue of $60 million. To put that in context, that single 90-day window outperformed their entire audited revenue for the full year of 2025. This is a classic case where the tape is lagging significantly behind the fundamental pivot, and that tension is where the real story for RZLV begins. When you look at RZLV AI stock alongside giants like Nvidia stock or Apple stock, it's easy to dismiss the smaller players, but the institutional activity behind the scenes tells a different story. The narrative on Wall Street is that AI software is becoming a commodity, and traditional software business models are being eaten alive by rising compute costs. However, RZLV is countering that expectation with its brainpower engine, which they claim delivers over 90% core software margins. This isn't just a chatbot, it's an agentic commerce platform that's already being integrated by massive retail players like Burberry and Gucci. While the market treats RZLV like a speculative lottery ticket, the underlying data shows they have already contracted a revenue floor of over $232 million heading into this year. If they hit their $360 million guidance for 2026, we are looking at nearly 8 times growth year over year. You don't see those kinds of numbers in an individual brokerage account every day, and yet the stock remains pinned under $3. A lot of the pressure we've seen on RZLV lately has been collateral damage from the broader tech sector. When names like Salesforce or ServiceNow take a hit because of concerns over AI monetization, small-cap AI stocks get sold off indiscriminately. We saw this recently when reports about OpenAI missing revenue targets sent a ripple through the entire ecosystem. But here's the contrarian take. While the giants are fighting over who has the biggest model, RZLV is quietly locking down the transaction layer of retail. They aren't just trying to answer questions, they are trying to automate the entire purchase funnel. This is why you see analyst price targets from firms like H.C. Wainwright sitting as high as $11 or even $15. There is a fundamental belief among those who have looked under the hood that the market is severely mispricing the scalability of their SDK, which is already installed on nearly 60 million consumer devices. For those of you managing your own portfolios through investing sites or using tools like Schwab Intelligent Portfolios, the question is always about the risk-to-reward ratio. The risk with RZLV is clear. They have a shelf registration of 37 million shares that could lead to dilution, and they are still working towards full profitability. But on the reward side, you have a CEO in Daniel Wagner who was recently buying hundreds of thousands of shares of his own company at $4 apiece when the market was trading lower. When an insider puts that much of their own capital on the line at a premium to the current market price, it usually signals that the internal reality is much brighter than the public expectation. Most retail investors are waiting for the stock to break 5 before they pay attention, but the institutional move often happens long before the breakout occurs on the Robinhood app or through Fidelity wealth management platforms. Let's talk about the specific price action we're seeing today. The volume is relatively low, which tells us that the sellers are exhausted, but the buyers are still waiting for a major catalyst to step back in. We are sitting well below the 200-day moving average, which is usually a bearish signal. But in the world of high-growth AI, these technicals can be deceptive. If you're looking for investment help or looking to invest online in the next big tech shift, you have to decide if you believe the company's claim that they can reach profitability without raising further equity capital. If they can truly sustain their $360 million revenue target with their existing cash reserves, the current market cap of around $1 billion starts to look like a bargain compared to the multiples we see in the wider software as a service sector. If you're watching this right now, I want to hear your perspective on the small cap AI space. Comment below how many shares of RZLV AI you currently hold, or if you think the market is right to be skeptical of these smaller players. Getting engagement on these topics helps us see where the retail sentiment is actually shifting. Are you seeing RZLV as a value play, or are you staying away until they prove that $360 million guidance is more than just a projection? Now, let's look at the business model, because that is where the tension between expectation and reality is most visible. The common belief is that building a retail-specific AI is too expensive, and that Google or Microsoft will eventually just build it themselves and crush the competition. RZLV's reality is that they have built a specialized near-zero hallucination LLM that specifically targets SKU-level precision. Retailers don't want a general-purpose AI that might recommend a competitor's product or get a price wrong. They want a deterministic engine that acts as a digital salesperson.
By integrating directly into Microsoft Foundry and Google's infrastructure, Resolve isn't trying to beat the Titans, they are trying to be the specialized tool that makes the Titans' cloud services more valuable to retailers. This is a classic pick-and-shovel play in the AI gold rush. Another massive catalyst that most people are overlooking is the listing of their SQD token on Revolut. By opening up their ecosystem to over 70 million users, they are bridging the gap between traditional commerce and digital assets. This isn't just about crypto speculation, it's about creating a frictionless loyalty and payment layer that bypasses the traditional toll bridges of the financial world. When you combine this with their recent $230 million acquisition of Reward Loyalty, you start to see a company that is aggressively building an end-to-end ecosystem. This is much more than a simple software play, it's a bid to own the entire transaction history of the consumer. If you're using a Fidelity trading platform or Interactive Brokers to scout for under-the-radar growth, you'll notice that Resolve's revenue growth of nearly 79% per annum is significantly higher than the industry average of 18%. That kind of outperformance usually demands a premium, but right now RZLV is trading at a discount. The market is effectively pricing in a high probability of failure, while the financial reports are screaming success. This gap is where the opportunity lives, but it requires a stomach for the daily swings that come with NASDAQ-listed microcaps. We have seen the stock drop on broad tech sell-offs even when their own news was positive, which is a sign of a stock that is still being traded by algorithms rather than fundamental investors. Looking at the future outlook, the next few quarters will be the ultimate test. They have promised to exit 2026 with an annual recurring revenue run rate of $500 million. If they even get close to that number, the current share price of $2.61 will seem like a distant memory. However, the macro environment is the biggest risk. If interest rates stay higher for longer, or if there is a massive pullback in AI spending, even a high-performing company like Resolve could see its valuation compressed. But given that they are already operating at a global scale with 950 enterprise customers, they have a level of diversification that many of their peers lack. To summarize the situation, the market expectation is that Resolve AI is a speculative, cash-burning AI play that is struggling to find relevance in a crowded field. The reality is that they are delivering massive revenue growth, securing high-profile enterprise partnerships, and are led by a CEO who is putting his own money where his mouth is. The tension between those 2 points is what creates the volatility we see today. Whether you are using a SoFi trading platform or managing a complex individual brokerage account, RZLV represents a high-conviction bet on the agentic shift in global commerce. It isn't for the faint of heart, but for those who believe the fundamental growth will eventually force the stock price to catch up, the current levels offer a compelling entry point compared to where analysts think this is going. Keep an eye on the volume and the upcoming earnings calls, as those will be the true indicators of whether this story is following the path to that $500 million ARR goal, or if the market skepticism is finally justified. Authority in this market comes from looking past the daily noise and focusing on the revenue visibility, and right now, Resolve's visibility is clearer than it has ever been. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.